Oops, let me shift that over. I have to do this first before I start anything. Check, check. Okay. Good evening, everybody. Kirk, what's going on, my friend? Good to see you, brother. I am back. So, we got some goods today. Some good trading today. I wasn't here for it, but nevertheless, we saw our expected expansion. So let's take a look at the charts real quick and let's do a quick market review and get into what we anticipate on Friday. Good, good. Hope you're doing well. So let's go over to the charts. Okay, so what do we have? So Friday, we've got a liquidity injection, meaning volatility at 8:30 tomorrow a.m. So watch out for some fair value gaps to form around that time. Look for a price run up or run down at that time, even before that. Sometimes I see price run up from 7 a.m. up until this point in time. Yeah. Yeah. I was spot on. But that's the nature of the experience in time, right? I'm not going to get it right 100% of the time, but when it's easier to call, when I see things that are there, it's going to be worth the preparation the night before. You were there last night. We talked through the exact same concepts and then mapped it out in the morning. So really cool to see. But tomorrow, just watch out for that 8:30 a.m. and 10 o'clock a.m. volatility. That's typically where you'll find most of the trades. And then Friday, it's going to be a little choppy. I anticipate it being a little bit choppier, but that's okay. You know, we had a big week and lots of movement. So let me pull over the daily chart first so we can take a look at that on the higher time frame downwards. So let's go to the daily and take a look at what happened once this loads. So big range days. So Monday, Tuesday, Wednesday expansion, Thursday expansion. Now, expansion only works until we've hit a really key level there. When we did with that monthly premium BCE consequent encroachment, which I actually have to now mark as touched. That's the midpoint there. So what can happen now, especially since we've hit a key level and we're at the end of the week, we could see a retracement back up 20%, 30%. We could see it make a slightly lower low, maybe take out these sell stops and then retrace. I would be very surprised if we were to continue moving lower, because we've kind of busted through this whole area here, this whole fair value gap on the daily. If you recall, we have this whole space here. This is one, and I could probably, at this point, I could probably remove this and make this into one big daily candle here. So that is one big daily gap. So, and it actually goes here. And there's price traded down into this volume imbalance, like I mentioned, and the consequent encroachment of this bullish order block, that black candle there. So where did it close? Right around that number, right around that, just below it, actually. So this leaves some room for it to continue downwards, although we are at a key monthly level. Those monthly levels and weekly levels, oftentimes, those are the most respected. Those are the ones where institutions are trading on. So let's take a look down into the price action from today and see what happened. So if you remember, about this morning when I got on, you know, it couldn't have been more than 7 o'clock, maybe 7 o'clock, 8 o'clock. This is all that had happened in price. You know, London created a low. Asia, we created a high, and that's all we. And I pointed out that there was this liquidity gap on the lower time frame. When we hopped onto the 15 or 5 minute, we'll see it a lot clearer. But that's all we could see at the time, right? That's all we had our eyes on. And so what could I predict? Well, I was pointing that we would come up into this liquidity void. Basically, there's some time between the close of yesterday and the open of today where there's no price action whatsoever. Those typically are treated like magnets. Price is going to draw to them at some point. Despite your bearish bias, keep in mind we're at the end of the week. We've had a huge expansion the previous day and today as well. Or rather, the previous day we had a huge expansion, so naturally we would need some level of retracement, right? So what happens throughout the rest of the day? We see at open, or at a little bit at 8:30, we see it goes up, takes out that liquidity range, then proceeds to come down and capture the volume imbalance and ultimately down to the monthly level there. So we had all those marked out. If you took any of those trades, congratulations. I was at work all day and physically in the office at my job, my consulting gig. So I cannot trade on Thursdays and Tuesdays now if I have to go in the office. So I will have to make do with Wednesday trading and Monday and Friday trading, which isn't the best. So I have very low probability on Monday. And so one trick, if you want to be profitable in the early stages, is wait until Tuesday, Wednesday, Thursday to trade, and only trade on those days, because you're guaranteed to have the majority of the expansion for the most part, during those days. Not guaranteed, but most times. So once we take this buy side liquidity, we look for sell side. And where is sell side? We marked this out. We marked out that sell side liquidity here in the morning, and it attacks it right when it takes out this level here. It attacks the sell side liquidity and ultimately makes it down to that monthly key level. So that's on the hourly, and then we ended up retracing quite a bit, but let's take a look into the lower time frames and see what really occurred on a smaller time frame. So see what you could potentially even look for. So this is the day's price action, right? This is green, so this is 9:30. This is the New York session. This is London close. This is London open. This is Asia. So we see that the levels that I had marked out, which is this line here and this line here. So we were looking, because our weekly bias is still short, right? Thursday, we still expect an expansion shorter, but we see that the market's given us this clue saying, hey, I gapped down. I'm going to keep going down for a little bit, but I'm going to stop all those people out so I can go down even further and have more efficient price delivery. So what happens on the 5-15 minute is that, and during the day, this is what I would be doing. I'd be marking fair value gaps to the downside like this. On the 15 minute, I'd be marking this with a sell side imbalance, buy side inefficiency, and I would be marking it right as it forms. So 15 minutes goes by, this forms. Another 15 minutes goes by and it closes down here, this forms. I would instantly be looking for price to come up into this sell side imbalance, balance that back out, have maybe an order here and an order here with my stop above this high. And where does the price go to? Well, it goes back up to this level from the morning, rejects, and then in the coming 45 minutes hits our target there. So on the 15 minute, you could have gone short at 14,338. Now, the high of this candle is 14,384. So you would have had to endure a really, really painful drawdown. So we don't want to do that, right? So imagine, we did our analysis during the day. We're looking at the 15 minute. We see this form here at 8, 10 o'clock and 10:15. So keep those in mind. We're going to go down to a lower time frame and see what we could see to maybe see if we could find a better entry, right? So here we see that the 15 minute fair value gap, it formed here Let's see if there's anything that we can see that's on the 5-minute that would have given us a little bit of a inkling that we could take it a little bit shorter, like lower our risk a little bit. What else is here? On the 5-minute, there's this consideration, this thing called a bearish order block. It is the last up close candle after taking a key level, the last up close candle before price delivers downwards. So this could serve as a bearish order block. Price delivers downwards, it comes back up and touches that, beats the 50% wick on this bearish order block, completely goes down and engulfs that one, trades down, comes back up, and what does it trade up to? So if I take my candle and put it right at the close, this is roughly what I get here, right? So this is a 5-minute bearish order block. So you would have seen this on your this big red 15-minute sell side imbalance, and you would have switched over to a 5-minute quickly to see, hey, like, so this is about 10:15 to 10:30, right? So you would have seen about here, 10:15, 10:30, right? So 15 minutes would have gone by. You'd have seen this candle close and think, okay, this is a 15-minute sell side imbalance. This is a 5-minute bearish order block. You could have set a limit sell order right outside of that, right at that level here, that open of 14,370.25. And then 5, 10, 15, 20, 25 minutes. So 25 minutes later, this would have caught your limit order entry. This is a trade that I would take all day, by the way. This is what I look for when I'm going to pass those performance or those evaluation accounts, or even if I'm looking to trade. Like, I typically don't get a chance to take this trade because of the timing of it. I oftentimes have meetings, so I can't take this trade, but this is a trade that I would take almost every single time I see it, okay? Especially when I have a bearish bias. So you see that we have a 15-minute high, like a medium time frame sell side imbalance. You see that we have a up close candle before a massive downswing. So we keep the bottom of this to be the open being 14,370.25, 14,370.25. Let's mark that out. It pays to be exact and accurate. So make sure your levels are crystal clean. Make it a habit. It becomes easier that way. So price comes up into this at 10:55 and it hits your limit order right there. So your limit order is 14,370.25. So you would have had to endure a high of 384.25. It's still a lot, but in this case, I would have had to set my stop loss way up here, and that is a lot of risk. So not a huge fan of that, but you would have seen this here, and if you could have endured that 14,370 to 14,380 kind of move, then you would have reaped a lot of benefits in the coming half hour. As you can see, 14,370 all the way down to 14,270. That would have been 100 points plus. So this trade, what else could we see though? Let's see if we could even de-risk even more, right? So we see this, we see the 15-minute, we've come down to this 5-minute. We see this is here, we see this is here, but we see this huge chunk being a very risky stop loss area. It could go all the way back up here to the top of that. Let's see if we go down to 1 minute, if we can find something else, right? So keep in mind, on the 1 minute to our left, we still, at this time, market opens, we see it go down, we see it go down, we see it come back up for that 10:30 mark. So let's say it's 10:30, we see it come up to here. Okay. We know that the sell side is here. We know that it failed to get there. So when this happens and I'm bearish, I have a good feeling that it's going to typically go knock that out at some point. So I'm looking to see where could I possibly see additional areas that are in discount. So I'm taking this high to this low because it's the most recent swing. What can I possibly go to? Well, I can come to this fair value gap here. That's valid 1 minute fair value gap, and the midpoint as well. Let me make this a sell side imbalance. So what you're doing is you're now framing the lower time frame charts. What could happen? So what else is here? There's a sell side imbalance that's a little bit higher up this way on the 1 minute. And let me move this over so you can actually see it. But so there's this 1 minute sell side imbalance and this 1 minute sell side imbalance, all within this bearish order block as well, right? So you need to backtest a lot to see these things. But had I been live trading, this is what I would focus on. I would see that 15-minute fair value gap, which is this big red square. I'd come down to the 5 minute. I would see there's a bearish order block here. Great. Come down to the 1 minute and see, oh, there's these two fair value gaps. It could possibly get up to there, right? And what does price do then? So we see price go back down, try to get some more people short there. And what happens is they get squeezed out there. Price continues upwards, hits this bearish order block, goes up into what? This sell side imbalance. So I would have probably considered starting a position here. And if I can get this to work, let me just move this over a little bit. So we see that it never quite gets back up to this fair value gap. If we're bearish, we want to see these kind of breakaway gaps stay open. We want that kind of key that the algorithm's saying, hey, I'm going further down. You need to get started. So one thing as well, if you were only looking at it from the 15-minute perspective to go back to a lower time frame to look for a better entry, these two would be the ones that I would look for. Why is that? Well, when I take the swing high, so the candle close high to the candle close low here, right? I get a sense of where my equilibrium is at, that 50% mark. So price is allowed to be sold off anywhere above here, above this level here. Where could they possibly sell? They could sell here. They could sell here. So my true entries would have been anywhere within this 1 minute fair value gap. I would have looked to start selling short around there and there. And if you sell short there, you would have had to endure 1, 2, 3, 4, 5 minutes of drawdown. And then price careens towards your goal for the next about 40 or so minutes, right? That's all you would need. You could trade one mini and you could get 100 handles there. And even before that, we see that there's a fair value gap way over here on the 1 minute chart. Look at that. Bearish order block. What else is there? Bearish order block, right? Let me get rid of this Fibonacci, but you see that bearish order block there? Same difference, okay? This is the same exact 2022 model. If you go to ICT's 2022 lessons, just study that model alone will make you consistent. So what happens here? We have a high, low, higher high, displacement lower, fair value gap midway. We want price to come back. We want price to come back to it. Price comes back to it, hits that bearish order block, goes through it once more, third time, and then it gives up the ghost. So Then we see it go down from 14,420 to 14,340. So that's about 80 points. And actually it goes down to 27 and actually makes it down to 20. So there's 100. You could have had 100 points right there alone before even like getting down to the 15-minute fair value gap. So if you were watching the 1 minute, you could easily have taken that as a market structure shift right there. So higher low, higher high, lower low, lower high, and then it proceeds to continue downwards. This was a lot of choppy action on the way down, very high resistance. This would have taken some people thinking it was going to go long. They just drop it down again, and then they get the early shorts out by squeezing them right there. And you were ready for this second play because you were on the 1 minute after this 15-minute had already played out. So you're looking at the 1 minute after the fact, and we see that these are key levels here for a price to revisit. So not only is this a bearish order block, but this is also a mitigation block. So people who went long here, they got kind of hammered. What are they going to do? They're going to start to get out, break even. So they're going to start selling here. Smart money will also start selling here as well. And what happens? Well, you get the second 100-point play in the morning, all between the times of 9:30 to 11:30. So those are two incredible plays that I would have looked for today. I'm sad I missed it, but hopefully you guys caught some of it at least. But that's the kind of analysis that I would be looking for intraday. So that's it for the analysis on today's price action. Those were the two plays. Yes, absolutely. That in that high probability trade on a Thursday expansion week, meaning expansion to the downside, you see this evidence on Wednesday. Thursday, the week's not over. It doesn't just like, it can chop if it hits a very key level, which it did. That remember during my analysis, I saw it hit the level, and I mentioned in the morning things could go up into this range first, this liquidity void, before heading back down to take sell side. That's exactly what happened, and you'll start to see this happen a lot more frequently if you go back test. Knock my mic over. So you're going to have to go back test in order to see this happen on Thursdays specifically. So this is very important. What day of the week are you in? Are you in the beginning of the week? Are you in the middle? Are you towards the end on a Friday? So Mondays and Fridays are your least probable days of doing anything, because yes, you might be able to catch a scalp, but it could completely reverse on Monday. It could keep going on Tuesday. So if you're trying to short and you think you're bearish and you were trying to short, it could keep going upwards on Tuesdays until it makes a high. So this is why those Wednesdays and Thursdays are really key days to trade on. If you can't trade any other days, Wednesdays and Thursdays, that would be the only days that I trade, honestly. Tuesdays, Wednesdays, and Thursdays are all pretty good. So yeah, that high probability trade is what I would take every time. If you're looking to pass these Apex exams, like, let's do some math here. Okay. So let's say you hit, like, I don't know. Let's say you hit 80 handles of that 100, or even like, 50. Let's say 50. So you hit 50 handles times 4 ticks per handle times 0.5 per micro. So if you only traded 1 micro, that's $100. So if you make $100 5 times, you're not going to make that every single week, but if you can make that every week or every day, then that's already pretty superb. That's $500 a week. In 4 weeks, you'll have $2,000 right there. It's not going to be enough to pass your evaluation, but if you're really risk averse and you need to learn how to trade, that's the right way to do it first. Make sure you can get those big chunky moves. I only look for 30 handles when I trade on my performance accounts, because the accounts are so because the accounts are so small, and there's so small of a drawdown on them that I have to be really careful, you know. Plus, I have a main job that I oftentimes get called away for or get pulled into ad hoc calls, so I can't monitor the trades as well. So when you start to get those big moves, you don't have to do nearly as much. You can trade one contract, you'll still get a lion's share of the move. The people who are using 10 contracts, 5 contracts, they're blowing their accounts, you know. You don't want to be that person, but I mean, Apex is having that nice 90% off sale, but you're gonna, you know, if you can't trade, you're gonna blow that account and then blow your performance account, you know. So be careful with that. Tomorrow, so let's go to the hour. Let's go to the 4-hour actually. So we've been in this weekly expansion, open, high, low right now. Let's see if we have. So we do have some economic events tomorrow at 8:30 a.m. and 10 o'clock a.m. So if we are going to continue to expand, the weekly CIBI or BISI is the next thing. Gary, thank you for joining. I appreciate having you here, man. I hope this is valuable, and if it is, you know, I don't know who's liking the streams, but I appreciate that. That helps out a lot. Appreciate you having you as subscribers if you are subscribed. I know Kirk is, so greatly appreciate you. So on Friday though, actually I need to go out for the weekly for this to show you, because this is a phenomenon that is very, very interesting. So keep in mind, look at this right now. So this little gap here, these two yellow lines, that's the same weekly buy side imbalance that hasn't been traded to yet, above this really key equilibrium point. So from the low of the swing to the high of the swing, this is the midpoint of it. And so price will trade to equilibrium if it's in a range. It's just return to equilibrium is fair value. That's why we call it a fair value gap. So I'm thinking that we can trade to the midpoint of this wick here. If we trade past the midpoint there, we will probably trade to the weekly imbalance tomorrow. I don't know, it does seem a little heavy, but we did bounce back up from this monthly premium consequent encroachment of this buy side imbalance. So let's take a look. Let's blow this up a little bit so we can see a little bit more of this wick. Okay. What I'm going to do now is I'm going to take a fib and, oops, where did it go? From the low to the high. Oops, wrong way. I probably want to do the high to low actually so I can see the right numbers. So I'm going to take a Fibonacci. I'm assuming that this is the low of the week. It might not be, but I'm assuming for now. Where can price retrace to? So during any given week, price can typically retrace 20 or 30%. We saw this happen last week before it started giving up the ghost and trading lower. Right now, it's already at that 20% mark. So remember, if we go down to the daily now, remember that when we are looking for the end of the week, we expect a bit of retracement because there's always a candle open, high, candle close, and low. Regardless of what time frame you are on, this is always true. You will never find an exception to this rule. On a sell side day, there will always be an open, high, close, low. On a buy day or a day that was green, you'll have open, low, high, or close, and then high, right? Open, high, low, close. So same on the weekly, same on the monthly, same on a 5-minute, same on a 1-minute. I've actually used a 5-second. I use a 5-second chart, so I use the same concepts there. If you can study that, ICT calls that the power of three. In his first 2016 lessons, the first month or two, you'll learn about power of three there. I highly recommend you go do that if you don't know about it, but he goes into further detail that I'm not going into, okay? So we have this week already expanding downwards. It hit a key point, so it's natural that it's going to start to retrace. Where could it retrace to? Well, there's a lot of things that we broke. So on the daily, it can retrace to this volume imbalance here. It can retrace to this previous day's candle high, or open rather. And it could go back into this volume imbalance and head lower. You know, it could aim for this short-term low. We don't know what's going to happen on a Friday. So that's why it is quite difficult on a Friday. You can't trust that the trend is going to just keep on dumping. Being very nimble is kind of the way to do it on Friday. I don't look for major moves on Friday, but I can typically find 30 or so handles. So even if you can find 10 handles or 20 handles, that's great. I mean, you know, find what you can on Friday before it reverses and be nimble, because you can certainly see price will react at key levels as it has been. And typically we see a little bit of consolidation during that time. So for that reason, I'm not super keen to take a long, but I'm also not willing to take a short at this big of a discount, right? So I think that we're going to chop and head upwards a little bit. I think there's room. You know, this is the last day for price to do anything, and it's expanded a lot on the downside. So we'll see if tomorrow, if we get a little bit of a retracement, kind of relief rally, and we'll see where the next week holds. I think I would like for it to head back up into this fair value gap and reject there if we're going to do anything. But I don't know what's going to happen on Friday. It's really tough. So yeah, I mean, let's watch it. Pinpoint your key levels. We'll go live after Asia, after London. There's some people that trade Asia, and more power to you, but Asia is just so painstakingly slow that I just choose not to trade Asia. If you can stay up till London and trade 2 or 3 in the morning, then you'll see some pretty nice moves. But I can't stay up that late with this main job, right? So that's it. I think that's it for tonight. I will wake up again tomorrow and then see where we are. The obvious changes in liquidity. This is now a short-term low, and maybe this gets drawn out a little bit further. And then, of course, this is no longer a short-term high, but rather this is, right? So keep in mind that you're now in this range. You're gonna need something to break you out of this range if you're gonna need to see where the next traditional flow is, whether it be bullish or bearish. And I think that's it. I think that's it for tonight. I'm getting a little tired, so I'm gonna try to go hydrate a little bit and kind of see where else I can see something happening tomorrow. The problem with tomorrow is that there are fair value gaps, liquidity voids, volume imbalances to the top and bottom. And when that happens, you typically don't get really nice clean price action like you did today, or like you did yesterday rather. So I think we're gonna call it there for tonight. Let's wake up again tomorrow morning to take a look and see what transpired over Asia and what transpired over London. If you're awake during London trading, congratulations for you. I'm not so bold, so at least not yet. So yeah, I think that's it. We'll keep it short, about half an hour today, and we'll see you all in the morning. Hopefully that made sense, and get some good rest tonight. We will resume again tomorrow morning. Yep, absolutely, Kirk. Thank you. It was really fun getting a chance to really like shoot the shit with people in the evening last night. So, really good questions from everybody. Honestly, awesome questions. So, um, let's see how the week ends, and we'll enjoy a week. Yeah. Thank you very much for coming, and get some rest. Okay. Have a good one. Gary, thanks for joining too. Appreciate you, and have a good one. We'll see you in the morning. Take care. Good night.